maybe using the premium maybe is too high for me, then we can adjust a little bit. Maybe we reduce our coverage, maybe we shorten our term, maybe we put longer premium terms.
Do you know which insurance you should get? Are you paying too much for your insurance? Should you cut your ILP? Meet Ziqi, who helps to manage me and my family's insurance. The special thing about him is that he is an insurance broker, where he's not tied up to just one insurance company. Instead, he has access to different insurance companies here in Singapore. So he gets to always pick the best insurance among different companies. And in this video, he will be answering all your burning questions about insurance. So Ziqi, when is the best time to start buying insurance?
Okay, here is some general guidelines depend on different type of insurance. Firstly, we talk about health insurance. Normally for locals or PR, usually they buy health insurance for their child when the child is 14 days old. Okay, why 14 days old? This one is the minimum entry age for health insurance. So we can tell that we need to get a health insurance as soon as possible. For foreigners, normally they will get their health insurance once they decide to stay in Singapore for a long term. Okay, secondly, we talk about life insurance. For life insurance, it is more important when you have your dependents who relies on your income or any financial obligations like mortgage loan or any other debits.
Like if I have a family that get life insurance.
Yes, because life insurance normally is replace our incomes.
Okay.
So if you have dependents relies on your income, you should get the life insurance sooner rather than later.
But what if I don't have enough money? Like if I graduated from university, I don't have a lot of pay. Which insurance should I get first?
I will say health insurance, because the health insurance protect us from high medical costs.
Okay.
Without a health insurance, it can be financial burdensome if you suffer any hospital stays or surgeries. The health insurance cover up to 95% of your hospital bill. Okay, but there's some limitations. You need to be hospital stay or surgery. If just you go clinic, you do not have any treatment or surgeries, then cannot claim. Must fulfill one of either hospital stay or surgery.
Okay, but what if I have cancer, then I go for a hospital checkup? Does it cover for health insurance?
Because the health insurance is cover pre and post for the hospital stays as well. Okay. So let's say we do a checkup for the cancers. Then after that, I have been advised to be warded in the hospital. So the pre-check also can be covered.
Okay.
And also the follow-up and can be covered as well.
Okay.
But there's a time limit.
Okay, so health insurance is most important.
Yes, correct.
Okay. Okay, so moving on to life insurance. Should I get term insurance or whole life? Because some people say that you invest term, buy the rest. Then what is the whole life for?
Okay, it's a very common question I always been asked from my clients.
Okay.
A term or whole life. Firstly, we talk about term plan. Okay, term plan is just cover a specific term.
Okay.
Maybe 10 years, 20 years or 30 years, you can choose by yourself. But after that specific term, no more coverage for you. And the premium is more affordable compared to whole life.
Okay.
Why? Because term plan don't have any cash value. So the money you pay, you can't even get $1 back from insurance company. Then we talk about the whole life plan. Of course, as the name shows, whole life plan is a whole life plan, can cover you for your entire life. But the premium just now I talked is much higher than term plan because parts of the premiums goes to accumulate the cash value. So eventually, if you don't want this plan, you want to surrender, at least you can get some money back. That's the main part. And of course, if you want to have very high coverage, the premium will be very high.
But how do I choose between the two, term or whole life?
Not a fixed answer to choose term or whole life. If let's say I want a whole life coverage, but for a specific time, because I have children right now, for past 20 years or 30 years, I need a higher coverage. So we can mix and match. So let's see, we can mix and match for the whole life plan and term plan. If let's see, I buy a less coverage for a whole life plan and the boost for a higher coverage in next 30 years. It's a way to solve our problems. So there's not must buy one of them. We can do mix and match. to fulfill our needs.
Okay, so for term plan, right, you mentioned it's only for like 10 to 30 years. Then for people who buy term plan, right, after that 30 years, right, there's no more coverage. Like, is that a bad thing?
Yes, it's a bad thing. But normally it depends. Just now we talk about financial needs. If you need a financial coverage for your dependents, maybe your mortgage, I think both of them time range. Maybe my kids will be grow up in next 20 or 30 years. My mortgage will be paid off by next 25 or 30 years. So after that, I do not have so much financial applications. So I do not need that higher coverage. Okay. I can shorter them. So I can buy a less coverage of the whole life plan.
So it's to replace the loss of income during that period.
Yes.
So like, let's say if you have retired, your house all paid off, your kids have all grown up, then you don't need that high coverage.
Yes, correct.
Okay. Quick pause. If you are looking to trade options, you can check out Webull. Webull charges a low fee of just 55 cents per contract and 0 platform fees, which is cheaper than many of the other brokers out there. Besides that, Webull also lets you streamline the options trading process by having a whole corner of app dedicated to options. For example, there's option statistics and probability analysis tools, where you'll be able to view data such as volume distribution, volume analysis to help you better analyze your probability of success even before making a trade. There's also the 0DTE Options Center, where you'll be able to easily track net premium trends of long and short option contracts to quickly locate investment opportunities. Right now, Webull is running an options trading promo, where both new and existing users will get to enjoy US options free commission whenever you trade a minimum of 100 option contracts monthly. In Webull's latest welcome promo, if you use my exclusive link to sign up, fund, and trade, and fulfill the respective criteria, you'll be eligible to get up to $400 cash vouchers. You can also get up to 7% per annum yield for USD Money Bull when you fund a cap of $100,000 for up to 90 days, where you can potentially untap a yield of $1,750. This promotion is eligible for new users only. Otherwise, if you are an existing user who has not transferred any shares into Webull before, you can take part in the Transfer In promo, where you can get anywhere between $50 to $1,500 trading vouchers when you fulfill the requirements. So if you are interested in taking your investing to the next level, do sign up to Webull using my link down below. Alright, let's get back to the video. How much should I spend on insurance? Like what's the percentage of salary, or do you look by coverage instead?
Normally we calculate this based on coverage. Because just now I mentioned, if you have dependents, you have mortgage loans, maybe you have older parents to take care to support their daily life. So we calculate all these of your financial needs, and we do a calculation about the whole coverage you need. And based on the coverage you need, how long the term you need, we come out a premium. Then maybe you think the premium maybe is too high for me, then we can adjust a little bit. Maybe we reduce our coverage, maybe we shorten our term, maybe we put longer premium terms. We can adjust it based on our budget.
So for like term plan, right, is there a formula to know what is the correct coverage?
Normally it's about 10 times our annual income, but also depends how much debit you have. Okay. Maybe your mortgage loan is left a lot. You need to make sure you are covered for that as well. So it's a plus minus things. For health insurance, there's no such range to choose. It's just to choose what type of plan you need to cover up to private hospital or government hospital is enough.
What normally people choose?
If you think the premium you can't afford, then I will recommend you to go with a private hospital coverage.
How come?
The time efficiency for an appointment or whatever surgery need to be arranged. I think the private hospital is much faster than government. And of course, the hospital bill is much higher.
Right.
I think at least 2 to 3 times higher than government hospital. That's why the premium is 2 to 3 times of your government hospital premium as well.
So because you want to see the doctor faster, you're more willing to pay more for the comfort also.
And maybe some of them, they like the environment of the hospital as well.
Right, like you can stay in a single bedroom or like share room, that kind.
Yes, correct.
What about like accident insurance? What's the coverage do I need?
The accident insurance is about medical reimbursement of your accident cost.
Right.
Maybe you cut your finger, you do a simple treatment in the clinics. That one can cover by accident plan, but not covered by hospital plan. Because the health insurance is only cover either hospital stays or surgeries. So the normal treatment cannot be covered by hospital plan. That's why we need an accident plan for those type of treatment. Just now I mentioned you cut your fingers, you fall down, anything related to this, we can claim as a accident plan.
What coverage do we need for the accident plan?
Normally, I just mention to my clients, I think the first tier should be okay.
Basically, you just want the coverage.
Yes, the reimbursement part is about 2,000 of your medical reimbursement. That one is, I think, it's more than enough for accident.
Like, let's say if I fall down, got into a car accident, will this pay out for the accident?
Depends whether you are being warded in the hospital or not. If big injury, you need to be warded in the hospital or you need to do some surgeries, it will be covered by your health insurance. If like minor injury, I just need to go to clinic, do a simple treatment, then it will be covered by accident plan.
Cannot claim both at the same time?
Yes, definitely cannot claim.
Okay, that's that. So other than health, accident and life insurance, what other insurance should you get?
Normally we talk about insurance, there are two types of insurance I will talk to my client. One is protection. The other one is wealth accumulation. I separate these two separately. Okay, so for protection wise, only these three insurance: health, accident, and life. Life includes death, TPD, and critical illness. And the other part, wealth accumulation, is about savings, investment. So if we talk about protection, these three is enough for.
Okay, so the next question is like, normal people can buy insurance, but what if I have a pre-existing condition and I'm excluded from buying insurance? What can I do for protection?
Okay, I got some of these cases as well. My clients got rejected by insurance companies due to some existing conditions. Firstly, we need to know what conditions you have, and that one can be fully recovered or maybe get better or not. So if let's say currently you are suffering a existing condition, but it can be fully recovered by some treatment maybe next year, then we can do an appeal of these applications based on medical report and like doctor memos to show that you are fully recovered with these conditions or get better. So we can fight with insurance companies to buy in insurance.
Okay.
And for the worst case, the situation is really bad. We can't buy insurance to cover our like death benefits or critical illness benefit or even health insurance. Then we should looking for other risk management tools, because insurance is just a risk management tool. If something happens, it can cover me. So if we can't buy an insurance to cover us, maybe we need to do some savings, do some investment to accumulation our wealth. Just in case something happens, we can afford it.
So is the other part of the insurance like the wealth accumulation part?
Yes, that part of insurance they do not need underwriting because it's a wealth accumulation.
So you either buy insurance to cover that part or you do your own investment to cover that part?
Yes, correct.
Okay, can. So the other thing is insurance is expensive. Is there any way that I can save on insurance?
Okay, I think there's 2 points for saving your insurance costs. The first point is we need to check whether we are over covered. Because just now we mentioned about accident plan. I got some cases like once I review my client's policy, I noticed that they have 2 or 3 accident plans in one time. I asked them why. Oh, they say, okay, my friend is doing insurance, I support them, I buy one accident plan from him, buy one accident from others. Then I asked them, do you know that for the medical reimbursement part, no matter how many accident plans you have, you can just claim one.
Oh, not from different companies?
Yes, you can just claim one. So even you have 2 or 3, it's waste your money. One is enough. This one is the first point, whether you are over covered. Okay, the second point is once you are buying the insurance, let's say health insurance or accident insurance or life insurance, whether you have compared different companies for the same coverage. Maybe you buy a life insurance for maybe 500k coverage, you pay $1,000, but I pay $800. Maybe the other guy they pay $700 for same coverage for same policy term. Why? Because we're choosing the lowest one from different companies.
Okay.
So that is one part, is to do comparisons.
How come different companies have different premium for different coverage?
Okay, because there's a lot of insurance companies in Singapore.
Okay.
There's not one company have all best products in one time. If that things happen, the other insurer cannot survive as well. So they have different focus areas. Maybe company A, they focus on life insurance. So the life insurance they do very well. The premium they adjust is affordable and the coverage is high. But for other insurers, they may focus on health insurance, they may focus on investment, they may focus on life insurance. So normally we choose the best product from each company. We can mix and match. We don't need to buy one insurance from one company.
Well, that's interesting because like when we buy insurance, most of the time we buy from friends or we buy from agents at roadshows, which are from just one company. So it's hard to know that you have the best plan.
Yes, that's why normally we looking for different companies with insurance broker. They can present most of the insurance at one time. So we can do a compare for them and choose one of the best.
But the coverage part, like everything is exactly the same, or is it like there are some parts that are not inside? Like A insurance has this, B insurance doesn't have this part.
Have this case as well. So we need to go through the fully comparisons, not only price, also the coverage as well. But let's say for term plan, for death or TPD coverage, it's almost same. Death is death, TPD is TPD. If let's say talk about critical illness, maybe a little bit difference. Maybe company A have more type of illness they cover, company B have less. Then we need to know that the extra part, whether we need to pay extra money for that part or no need to pay. It's decided by you.
But the most common illnesses are all covered.
Yes, correct.
Yeah, it's just the more rarer parts.
Yes, and also maybe some special terms. Special benefits. So we need to decide like whether we're okay for pay extra money for that part. If you're okay, then can.
Okay, so this is a common question that I always see online. The friend has sold him an ILP. Then after reading online, I see that ILP is expensive. Like, what should I do? Should I just cut?
For ILP plans, it's very popular in past, I think 5 or 10 years before. Part of your premium goes to protection. Part of your premium goes to an investment account. And if you ask me whether you need to cut or hold, it depends on the timing you buy in, depend on the ratios that protection, how many percent, investment, how many percent, also depend on the market. So normally I need to read through the full policy details you have. Then we decide whether we hold or cut, or hold sometime then cut.
What are you looking for if you are planning to hold?
The factors we need to look into is, just now I mentioned, the ratio of the protections or investment. Let's say if you pay $100 for this plan, how much premium goes to protection side? If let's say your $90 go to protection side, only $10 goes to investment plan, definitely the plan finally will lose.
Because the premium will go up over time.
It will go up year by year. And finally the protection side will over $100 which you pay. And then the money will be withdrawn from your investment account and your money will be less and less. So we need to focus on timing as well, the ratio as well, and also your investment return as well. If your investment return is really high to cover your protection, then also good. So variable factors. Currently for this market, this type of ILP I think is out of market as well. But I think most of the agencies do not sell this type of insurance because the client feedback, they say they're losing money, bad feedbacks. Currently we sell investment plan is pure investment plan. Protection is like term or whole life, like pure protection plans. So it's not really.
So long story short, whether to hold or cut, you should see a few more factors. So it's not just cut straight away. You can see like the ratio, what's the market doing right now, and how much you are paying for the plan.
Yes, because the younger you buy the ILP, the lower cost of insurance you pay. So most of your money goes to investment part. If you're too old to buy an ILP, then most of your premium goes to protection side. No more investment.
Then might as well just buy the coverage part.
Yes, correct.
If an insurance agent comes up to me on the street, then what should I do?
So I think for you, if you really don't have a financial agent with you, or you're really looking for some insurance, I think you can listen to them. They can give you some useful information as well. And if let's say if you really no time, you have your insurance already, or you have your insurance agent as well, then you just tell them nicely lah. Because as a financial agent, I know that the roadshow is a really tough job for them as well. They need to stand outside for a whole day, pitch everybody who working through, and I think 90 or 80% of them they'll be rejected.
But let's say if I want to meet an insurance agent, whether it's my friend, whether it's from roadshow, how do I better prepare myself before I meet them?
Firstly, you need to clear that what type of insurance you need. You need a health insurance, or you need a life insurance, or you need an accident insurance. Okay, and secondly is whether you need a savings or investment. And during the meetup, you need to ask for prove that what the agent say. Normally they say, oh, this is a protection plan. No cash values or have cash values. Say, it's a free plan because maybe 5 or 10 years later you can get your money back or whatever. So you need to ask for black and white. Okay. The contract was to see that. And once you are buying a like say savings plan or investment plan, they say, oh, the return is very high, 4% or 8%. You need to ask, it's a guarantee or project return. You need to know, because once you buy, I say first 4% is really high. Okay lah, I buy. After year by year, you see the return is not that 4%, it's maybe 2% or 3%. Why? Because the 4% may be a project return. So you need to know the what is guaranteed or not guaranteed. Is a risk-free one or you have risk one. Okay. It's like savings or investment. Because some of my clients, they say, I have a saving plan. After I read through their policies, I see it's not a saving plan, it's an investment. Okay. So they may lose money. So no matter the agency, just see black and white. Going through the whole process, they need to show you the contract was.
Is there any way I can calculate my own coverage to know what I really need rather than listen to the agent to tell me what I need?
Okay, firstly, just now I mentioned it's about your dependents, your debits, and maybe your old parents who relies on you. So you plus all this lah. And also depends on your annual income, annual expense as well. Right. If your expense is high, then you need more coverage. Your expense is low, then you need lower coverage. For example, if your income is 100k, but your annual expense is only 50k, or your annual expense is 80k, your annual expense is 30k, it's also different. Right. So normally we calculate it based on annual expense. It's not income.
Is there like a guideline that say insurance expense should not exceed how much of my annual income?
Okay, normally it is my own calculation. Normally I will ask my clients not exceed 20%, but 20% is really a very high ratio.
Quite high, right?
Yeah, but normally for protection only, I think 10% will be enough as well. 10% can buy enough coverage for you. Maybe the other 10% is doing like saving, wealth accumulation.
Should I review my insurance every year? Like, is there a need to?
Okay, basically I recommend that you review your policy once your life stage is changed. Because when you fresh graduate, I believe that you buy some of your insurance. But once you get married, you get dependents, I think the more coverage you need. And once you buy a house, you got a housing loan. I think the more coverage you need as well. After your retirement or you're going to retirement, you need to plan for your retirement as well. So different life stage, you have different needs. So you need to go through to review the policy once your life stage is changed.
I think that's all for this interview. If you guys need a second opinion on your insurance coverage or your existing insurance, you can contact him. I will leave his link down below. I think the good thing about him is that he's an insurance broker, so he can help you to compare many different plans, not just one insurance. So I think that's all. Bye!